So thanks everybody for joining in. Thanks Louis and the Tokenomics team for inviting me to present on Makers, one of the OG DeFi protocols, and I'm sure it's going to be very interesting because we'll run you through the document that we had put together, but more importantly, I'm going to touch upon a whole bunch of new proposals that have got listed in the last 3 months in Makers. And what I'm going to try and do essentially is give you a high level overview of what Maker is as a protocol, to what is the tokenomics of the protocol, right? Again, interestingly, it's a two token system. So how do two tokens interact with each other? And finally, going to touch upon some of the interesting things like real world asset financing, for which Maker has been pretty much a trailblazer. And we're going to link all of it to some of the new proposals like the USDC staking proposal. And there was another very hotly contested proposal, which was monetless staking proposal, which was a $500 million proposal. So I'm going to touch upon all of that as well, right? So let me kick things off now. First things first, what is Makers? The fundamentals, the basic, right? It's almost 101. So Maker is basically a permissionless, multi-asset, over-collateralized lending platform, right? What essentially that means is it's a bank, right? It's a Web3 bank. And what does permissionless, multi-asset, over-collateralized mean? Permissionless essentially means it's DeFi. Hence, you don't need any permission. Anybody can come with its collateral. They can borrow or lend through this protocol. So no permissions needed, no KYC needed. The only thing that's needed is collateral. And according to the collateral, you will be allowed to borrow or lend a certain portion of it. Right? Why is it multi-asset? Because only a certain amount of assets, only a few particular assets have been identified, which you can borrow or lend on MakerDAO, right? So these are assets like ETH, Staked ETH, Matic, and a bunch of similar assets, high quality crypto assets. And in addition to it, and what really makes Maker unique to some extent, is it now accepts a whole bunch of real world assets also as collateral. So if you look at some of the pools that they've created there, I think I now have 7 or 8 pools uh, of real world assets, which you can use to kind of borrow on MakerDAO, right? And finally, it's over collateralized. Over collateralized is actually very simple to understand, right? I think pretty much all of us, if we have interacted with DeFi, would have borrowed or we have over collateralized our loans, which essentially means if you need $100 worth of uh, assets, you will have to post $200 worth of collateral, so on and so forth, right? And if the value of the collateral falls, either you repost the collateral and close your loan, or you might get liquidated. So that is essentially how Maker works, right? Smart contract based, permissionless, no human intervention. Everything happens as per a set of rules. Now, again, there was a lot of conversation around, does DeFi work? And when we had episodes like Celsius, etc., a lot of the centralized actors defaulted on their loans, but Maker didn't default on any of its obligations, right? People who were not able to post additional collateral, they got liquidated. And those who had already lent to Maker, everybody was paid in full because Maker didn't suffer any delinquencies because of the structure that it has, right? So that is essentially in a very high level what Maker does, right? Again, to repeat, for the sake of easy understanding, it's like a Web3 bank, right? It borrows and lends. Now, what's really interesting is to understand how each all of that works. How does it all come together? How does it work effectively? Now, what Maker has done is done something very interesting. It is a two token ecosystem, right? There are two tokens. One is MKR, and the second is DAI. Now, I think all of us who know what DAI is, it's a stable coin. It's one of the top 5 stable coin projects out there, right? And unlike some of its other colleagues like USDC and USDT, it is completely decentralized, right? So there's one of the arguments that we hear often in favor of DAI, that it's a highly decentralized project and hence it's to that extent free from the risk of external centralized intervention, so as to speak, right? So let's understand how DAI works. uh, right? And how does that impact the value of Maker? Essentially, what is the Maker's tokenomics, and how does DAI actually work in this ecosystem? So, if you look at DAI, right, Maker, as I told you, is a bank, right? So, how does a bank make work? How does a bank work? So, when somebody borrows from Maker, he has to pay interest. In Maker terms, it's called a stability fees, right? So if you're borrowing from Maker, you pay them a stability fees. If you're lending to Maker, you'll get a certain rate of interest. It's called DSR, die savings rate, right? So that is really how Maker makes money, right? So if you're borrowing a lot from Maker, you're paying interest, which is the stability fees, which essentially is the source of income for Maker, right? So because it's completely on chain, you can actually go to Dune, throw in a couple of SQL queries, and you can pretty much get all the data with respect to how much money Maker is making, how much they're lending, right, at what rate, so on and so forth. In fact, the good folks at Maker have actually made it easy, and we don't even have to go to Dune and throw in queries. They have two websites where you can actually go and you will pretty much get all the data that you want around Maker, all the statistics. It's dicestats.com and makerburn.com. Right? You go to these two websites and you will get pretty much all the information that you need with respect to statistics of Maker, including the P&L, how much are they earning, who are they paying to, how many Maker is in circulation, how many Maker has been burned, you name it and the data is there, right? So going back to DAI, basically two technical words that we use DSR and stability fees. DSR is basically the interest that you get by depositing Maker, and stability fees is basically the cost of borrowing from Maker, right? uh, Again, there are a couple of other technical words that you would see in the document. It's a vault, it's an auction, right? Very simple. The set of contracts, smart contracts, through which a user interacts with Maker to deposit or borrow money. That's called a vault. So every time you put money, you're actually putting money in a vault. Every time you put a collateral, you're putting collateral in a vault, right? And that vault signifies or kind of constructs or has the smart contracts which determine how you interact with Maker, right? Auction is another simple process. Every time you want to kind of neutralize your loan or you get liquidated, there's an auction that happens through which there's another team called Keeper which buys off your loan and liquidates you basically, right? So these are some of the technical terms. Just touching upon them, you can read about them in more details in the base article, but just important for you to know so that the conversation, if it comes up, you know the context of what we're talking about, right? So that is basically how DAI works, how the borrowing happens, how the protocol actually earns money. Now, how is DAI related to Maker? That's the next part of the conversation, right? So let's look at the tokenomics of Maker for a second. So Maker, when they started, it was started as they minted 1 million Maker at the start of the project, right? And every time Maker earns some fees because of borrowing of DAI or lending of DAI, they accumulate that earning. They buy off Maker from the market and they burn it. So basically, the intent is that number of Maker in circulation needs to come down, and the construct is as the circulation comes down, uh, the supply will reduce and hence the value of Maker will go up, right? So that is basically the fundamental tokenomics or construct of Maker. Now for that to happen, what and the Maker has to do well is to lend effectively. If they lend effectively, they will be able to get most of their earnings in terms of lending without getting liquidated, and hence they will be able to continuously burn Maker, right? So that is the basic construct of Maker and how it interacts with DAI. So as long as the lending is effective, the Maker will keep getting burned off, and theoretically the price of Maker should go up. Now, I'm going to come back to that again in a minute, but for a second, I want to go back to DAI and talk about how DAI maintains its USD peg, right? That's another very, very interesting concept. How does DAI maintain its USD peg? So we talked about two concepts, the DSR and the stability fees. So that is essentially how DAI maintains its stability, its peg to the dollar. Now, what that means is that if there is a lot of demand for DAI in the market, right? What they do is they increase the stability fees. Basically, they increase the cost of borrowing, and hence the attractiveness of borrowing DAI actually comes down, right? And people stop borrowing DAI, which kind of brings the price of DAI back to one. If on the other hand, if the price of DAI is actually depegging and going below one, then what they will do is they'll make it attractive to borrow DAI, right? Which means they will reduce the stability fees to maybe as low as zero. It cannot be negative. It can only go as low as zero. So it might go as low as zero, which will increase and incentivize people to borrow DAI, because it's literally money at 0% rate of interest, right? Which would increase the demand for DAI in the market. And hence the value will go up and it will again get back to $1. So these are the two key mechanisms through which they control the price of DAI, and they try and keep it close to $1 by maintaining and managing the stability fees and DSR. However, in 2020, when we had a sudden market crash, the price of DAI went up to $1.22. It got depegged significantly. And that's when the third construct was put into place, which is a peg stability module. Right now, a peg stability module is basically a very unique vault where you have a lot of USDC in that vault. Right now, what that does is that it's almost like a collateral. So if you think there is the price of the DAI is going high, you want to reduce the amount of DAI in circulation, you can sell that USDC, or you can use that USDC to buy DAI from the market, hence reducing the circulation of DAI in the market. Simultaneously, if you think that the value of the DAI is going lower than $1, you can use that USDC, convert it into DAI, and throw in more DAI in the market to kind of increase the value of DAI. Right. So that is a third mechanism through which you can control the value of DAI and try and peg it to a US dollar. So this peg stability module is actually a very, very interesting concept and a very important concept as well, and something that I think we're going to touch upon again in significant details in the later part of the conversation. And
Chirag, if I may interrupt you for 1 second.
yeah, sure.
We have a question, I think, from Zoth.io. So I just want to pull him up on stage really quick and see if he can ask a question, and then you
Sure,
can decide if you want to answer it now or if you're answering it anyway later in the talk.
sure.
Hey,
Zo-
Zoth, you can. I assume you have a question, so please go ahead.
I don't have we given him the right
Oh,
to? Yeah.
I did, but he just disappeared again. Anyways, Zoth, if you still have a question, please just submit a speaker request again. Any of you guys too. If you have a question, definitely you can raise your hand, and then I'll wait for a good pause in Chirag's presentation as to not completely throw him off. If not, of course there'll be Q&A here at the end.
Yeah,
So
sure.
either which way you can ask your questions. All right, Chirag, go ahead.
Okay. So yeah, I mean, we can keep it interactive. Please keep shooting your questions. So I was just trying to construct the entire story of Maker right from the start, kind of bringing in the tokenomics element, and then more importantly, talking about some of the very important constructs of Maker, which are kind of forming the most heated conversation at this point in time. So the spec stability module and dependency of USDC, I think we're going to come back to it and we're going to touch upon it in a lot of details, because this has turned out to be something super interesting in the Maker community conversations right now. Right. So, anyways, going back to Maker, it's tokenomics. So we touched upon how the DAI USD peg is maintained. We talked about how the community manages its stability fees, DSR, to kind of keep the peg at one. And once that doesn't work, we also have the option of using a peg stability module and then using the USDC reserves that they have to try and play around and control the DAI available in the market. Right. So that's the USDC peg element. Now, going back to the tokenomics of it for a minute, right? So if you look at MKR as of now, they started with 1 million MKR, and it has two or three key areas in which the Maker is consumed or supplied in the market, right? One is there's certain amount of Maker that's sitting in the treasury. So people who are working on the protocol itself, they get paid in MKR. So every month, MKR is actually released from the treasury and paid out to these individuals who are contributing to the community. Right. So that is one consumption or use case of MKR. The second one, as we talked about, is once there's enough DAI revenue that's been accumulated, the community takes this revenue and buys MKR from the market and burns it to reduce the circulating supply of MKR, which essentially means that the value of MKR will go up. Now, there's a very interesting concept in Makers, right? Maker doesn't allow staking till now, right? So there's a huge debate within the community: should we allow staking? Now, the people who propose or who vote in favor of staking say that, hey, you know what, rather than just burning MKR, just give it as staking rewards to the holders of MKR. Because, the correlation between reducing the supply of MKR and its price going up is not very clearly established, right? It still strongly depends on direction of Ethereum. Right, the value and price of MKR is, in fact, if you go to diestats.com or makerburn.com and you see a comparison of DAI price or MKR price vis-a-vis ETH price, you will see that there is a very strong correlation between these two, right? And that is one of the reasons why a lot of MKR holders are saying, you know what, just introduce staking, allow us to stake our MKR so that we can then enjoy the rewards as staking rewards rather than using this to kind of burn off MKR from the market. So that's one interesting debate that's going on. And if you follow MKR, you will see this proposal coming out, this conversation happening in the community every now and then. Right. So these are two or three key constructs around which Maker works. Now let's look at the liquidity, the liquidation part as well. So in the event that a borrower is not able to pay off his debt on time, he gets liquidated. Right. What that essentially means is that, let's say you have borrowed $200 worth of ETH, right? Or let's say you have borrowed $100 worth of ETH by posting a collateral of $200, right? Let's say your liquidation price is $150. So if the value of the collateral comes down to $150, you get liquidated, which essentially means that the Maker protocol gets back his $100, plus they will charge you whatever stability fees has accrued to you till then. Now, this interestingly, this stability fees is calculated every second, right? So if it's 2% stability fees, which means 2% over a year, they'll calculate it compounded every second, right? So only the amount of seconds you have consumed that loan is what you pay for, right? So they calculate the stability fees up to the point of liquidation. They add it to that $100, and they add a 10 to 12% liquidation fees on top of that. So let's say you held it for a year, so you'll pay $100 principal back. You'll pay $2 of stability fees, and you'll pay $10 of liquidation fee. So you'll pay $112, and the remaining $38 collateral the borrower will get back. That will be returned back to him, right? So if you don't want to get liquidated, either you post additional collateral to kind of elongate your time period of borrowing, or you pay back the loan and close that account before it gets liquidated, right? That's how typically the Maker works. And these are the sources of income for Maker: trading fees, liquidation fees, and borrowing fees. Basically, three main lines of revenue for Makers, basically, right? Now, let me go a step further and talk about some of the interesting developments beyond the basics of how Maker works, right? So if you look at Maker, I think about a year back, it was about a 9 billion market cap of DAI, right? Compared to USDT, which was around $80, USDC, which was around $50 billion, right? So Maker, in spite of being one of the first OG stablecoin projects, kind of was trailing behind some of those centralized USDCs and USDTs of the world, right? So the community kind of had a long discussion around it to try and figure out that how do we make DAI relevant again, because the use cases for DAI have been significantly dwindling. And that's where one of the conversations moved towards investing in real world assets. What that means is that they wanted to kind of invest in real world assets and get yields from real world assets. And one of the big examples of which really has been pretty much the gold standard benchmark of how a real world asset deal will happen on DeFi is the HVB Bank deal that Maker concluded. It's $100 million deal where Maker is providing wholesale loan to HVB Bank, which essentially means that HVB Bank will get $100 million line of credit from Maker, which they will in turn take and borrow out to their consumers. So people like you and me in the US, they will be able to maybe take a home loan, and the capital that HDB will give them will actually be at the back end be the $100 million loan that the Makers has extended to HDB. So people will actually be getting a DAI loan without them realizing it's a DAI. For them, it will be a USD that will hit their account, right? This was pretty much a landmark deal and $100 million deal, which was fairly large in context to some of the other earlier small transactions that Maker had done, which was like $5-7 million here and there, right? And this
Um,
kind of
Chirag, sorry for stopping you, but we now successfully have Zoth as a speaker. I think he has a question about the real world asset stuff.
okay, go for it, Ross.
Hey Chirag, Petam here. Wanted to understand from the MakerDAO team, how does the real world marketplaces, which actually have tokenized assets listed, leverage MakerDAO's capabilities for yield generation?
Uh, Preetham, I'm not able to understand the question. What are you saying? You're saying that how will real world assets leverage the MakerDAO platform?
Yeah, how would real world asset marketplaces, for example,
Mm.
marketplaces which allow buying, selling, and trading of such assets, leverage
Mm.
MakerDAO for generating yield for its customers?
Mm. So, let's look at what Maker has been doing till now, right? So, what Maker has done is it's created a bunch of pools, right? So if you look at Centrifuge, it has almost three pools right now with various lenders. So you could register with Centrifuge, create a pool there, assuming you are a real world asset aggregation platform, right? You can create a pool there, attract Maker to invest a certain amount of capital into that pool, and then you can use that capital in turn to um, um, buy or borrow assets in the real world, right? So that yield that is going to be generated, so you are actually borrowing from Maker and lending it out to the real world, and the yield that you generate from is what you will basically use to pay back the Maker loan. So the assumption is Maker will lend to you at 3 to 4%, and then in the real world you will be able to attract a yield of 7 to 8%. So that 4% alpha is what you will use to pay off your expenses and create and give a return to your investors as well.
Okay, and is there any specific geographic limitation to where the assets needs to be? Are they only US based assets, or we could go it at a diverse locations also?
Yeah, that's a interesting question. So not Maker, but there are a bunch of other real world assets, and they are working across the world. So I'll tell you how the real world asset economy works, right? So if you look at some of the developed countries, like if you look at countries like US and Europe, right, their investors typically get 1 to 3% interest on their investments, right? The same quality of risk in terms of lending, if you assume in an emerging country like let's say LATAM India, right, you would probably get 10% return because of the cost of capital, right? So that is the arbitrage that a lot of people are playing on, right? So you get
No,
investors in that.
I'm aware of that, Chirag. That the question was that does MakerDAO, for example, lend to to a marketplace which operates in emerging markets, or it is only limited to US?
Yeah, so I have not seen a community proposal which where they have kind of clearly denied in investing in a emerging market business. So there is no such constraint. But as I said, there are only 7 pools right now or 8 pools right now on Maker, right? So maybe you can start a pool, and maybe there could be some reservations that the community might have with respect to the risk involved in the emerging country, and if they can quantify it effectively. But as long as you can satisfy that risk is minimal, and you can give them satisfaction that this is a pool which is high credit worthy pool, they would be very I'm sure they won't have any constraints in terms of evaluating that proposal.
So Chirag, then in that scenario, can you please tell me what are the kind of risk that as a community MakerDAO evaluates for investing in such assets, and what are the type of assets that MakerDAO looks at?
So the kind of risk that any community will look at if it's lending is first and foremost the quality of the underlying asset, right? Would it be able to generate the kind of yields it's promising without it going NPA? So first is the credit risk, second is the geographical risk, right? Right. Third is the regulatory risk. What if tomorrow that asset or the transaction is kind of withheld by the regulators? So these are the three big risks that I would mention that you have to be cognizant of, and you need to have a defense against. And in terms of What kind of assets are they looking at? All kinds of assets. They have done real estate. They have done banks through which they're doing personal loans, home loans, etc. And third, they have actually invested in, as I mentioned, almost $500 million in Monopolis, which is now being used to buy bonds, liquid bonds. So pretty much across the spectrum, they have investments in all kinds of asset classes.
Good. So just to keep the conversation going, Zoth, thank you so much for your questions. Just a reminder, right? Like we're not actually affiliated with MakerDAO, so we have analyzed what they do. And so I think a lot of the answers that Chirag's going to give you from here on out is go approach Maker and then get involved in their community, right? Which is separate from ours. But you have a really specific idea on how to use it, and I think that's amazing. And I'm sure that they would be happy to have you. But just for the purpose of moving along in our talk, I'd like to go ahead and do that now.
Thanks, Louis, for this. So yeah, I completely agree with Louis. These are just opinions of what we have understood basis our study of the protocol, and obviously this is not an endorsement or otherwise, but just sharing opinions and facts and what some of the proposals that have actually passed on Maker, so on and so forth. Right. So going back to what I was talking about, which is the RWA HVB transaction. $100 million got passed. 100% of it is deployed right now. And then something very interesting started to happen within the community post that. And, Rune Christensen, which is one of the founders of Maker, came up and said that, we need to reduce the dependency on real world assets and centralized actors. And this conversation kind of triggered after the entire tornado episode where USDC on Tornado was banned, and they stopped movement of USDC on Tornado platforms. So that is really when the whole conversation in Maker started, with Rune starting a proposal which is known as the end game proposal, that we need to reduce our dependency on centralized actors. And I again come back to the peg stability module, the $3 billion of USDC that are sitting in MakerDAO. And that is actually a big risk, right? Because if something happens to USDC tomorrow, entire Maker will get destabilized and it might lose its peg. That $3 billion is actually a kind of a risk that's sitting on Maker, and that's also one of the big debates within the community on how do we de-risk it. Right. So if you recently would have noticed, and you are generating no income out of that $3 billion, right? So there have been multiple conversations around it. Two proposals that I would touch upon. One was Maker community passing a proposal saying $1.5 billion within that USDC should be staked with Coinbase Pro rather, for 1.5% yield. So now that $3 billion, or at least half of it, is generating 1.5% yield for the community. So the community is going to earn certain amount of income from that USDC, which was otherwise just sitting idle. That's one landmark proposal passed with almost 80% votes from the community. Right. The second proposal is what this firm called Montelis proposed, which was taking $500 million of that USDC, giving it to Montelis for managing the treasury, and now they are investing it into bonds and other such liquid assets, so that again dependency on USDC is reduced to some extent, and there is a diversification of the treasury to that extent. So again, it's not a fully compliant and fully de-risked solution, but these are some of the many actions that the community has been taking to try and move away from the exposure to USDC. Right. And again, there have been multiple other proposals, but for the sake of the conversation, we'll limit it to this. And I think given the time, and given that we're already 30 minutes into the conversation, Luis, I think I will stop here for a minute, and maybe we can invite more questions, and then maybe we can build the conversation from that point on.
Yeah, perfect. So I had Artem had requested to speak. So Artem, if you want to.
Yes. Hi, guys. Thank you, Chirag, for great speech. I have a question, actually. Can you little bit talk? You talk a lot about proposals just now. Can you talk how your community use tokens to governance for voting?
Correct.
Yeah. Okay.
Right. So Thanks. That's a fantastic question, Artem. And in fact, MKR is a governance token. I should have mentioned it earlier, perhaps. And these are the tokens which actually you need to kind of use these tokens. These give you voting rights, and those that is how community votes. So each of those proposals that I touched upon, if you are an MKR holder, you have a right to participate in that conversation and vote. So Maker is very interesting in the sense that they have obviously the founders, Rune, etc., who have large holdings, which are obviously sitting with delegators, and then they have large investors like A16Z, etc., who are integral and who have been early investors into Maker. So they are again these large token holders, which typically come together in terms of in when some of these really important conversations and votings are happening. And for the rest, obviously, community can always vote depending on their holding of the Maker.
Okay, so just okay, good. So you just clarify, you use model like one token, one vote. Yeah, is it correct?
Yeah, exactly. One token, one vote.
Okay, yeah, thank you. Good.
Yeah. So again, just to add a little bit to it, there was this really contentious vote in Maker. I don't know if you read about it, where where uh, pretty much the entire community came together, A16Z, and everybody came together and wanted to vote, which was with respect to the end game proposal, and Dune proposing, investing $500 million with Montellis. And yeah, I think that's a great example of how where DAO governance fails when you have one token, one vote, because some of these whales had enough voting power to try and kind of influence the final outcome of the vote. So end of that proposal, the person who had credit for Maker, he stepped out. The person called Luca, and he was dissatisfied with the quality of the voting, and yeah, I think there was a lot of question marks that were raised with quality of decentralized governance in Maker. And again, the whole conversation around DAO governance was in the limelight, and one vote, one token, one vote is basically something that people were questioning about, as long as there are large whales who can influence voting and the results.
Okay, well, I think we have another question from Zoth.io.
Zod, go for it. Zod?
Yeah, if not, then just go ahead. And
I think he's mute. So
okay, just go ahead. Do you have any more points to cover, Chirag, or are you kind of at the end
no,
of
I
your
think I
presentation?
kind of touched upon pretty much most of the important things that I felt were important to talk about Maker. So anybody
Okay.
following Maker from this point onwards, I think this summary is going to be good enough for him to understand how Maker works and what the conversation within the community is about, so he can
Right.
actively participate and contribute.
Right. So one point that I thought was really interesting when I was editing the article with you was kind of the what do you call it? Token mechanism that MakerDAO has. So essentially, there's three different modes of repayment for loans, right, that are made, and depending on the scenario, it pushes either a token burn of Maker, which would hopefully increase the token price for Maker. There's like a neutral case where nothing really happens, and then there's a negative case where if collateral value drops really quickly, then the difference has to be made up by minting Maker, which increases supply, which could then negatively affect Maker price. So I think it's a really nice example of how you can use kind of this like real tokenomics, like a token incentive mechanism to help guide behavior in your DAO and like decision making in your DAO. That's one of my favorite examples that I like to use when I try to explain to people how this stuff works.
Correct. And I can kind of agree with you, Luis, because it's such a simple tokenomics. It's one of the simplest tokenomics I've seen, and yet it's so powerful and just
Yeah.
keeps everything in check.
Yeah, exactly. I think that's the key. I think the simplicity actually helps because then because if people don't understand it, then it won't guide their behavior, right? So
Correct.
it's so since tokenomics is a lot of just study of human behavior and how to influence people to doing things that that benefit the project. That's why I think the simple mechanisms work very well. Anybody else have a comment on this? If it's also about just tokenomics in general, feel free to request to speak.
In fact, Luis, what I would also recommend is if you could just give a 2-minute introduction to Tokenomics DAO, because I see a lot of people within the community, wanting to know more about tokenomics, learn tokenomics. When I was engaging with them on Twitter, and they asked for what's Tokenomics DAO. So maybe anybody who is listening today, or maybe even the recording, a small summary of Tokenomics DAO might be useful for them to kind of get some idea about how to join the DAO, etc.
Yeah, 100%. So Tokenomics DAO has been around now for pretty exactly a year. We publish a lot of high quality content. The kind of the core piece is these Tokenomics 101 articles. If you go to our website, tokenomicsdao.com, you can find these 101 articles. They've been written for about 30 different projects. They're very in-depth, kind of long-form pieces. And then beyond that, we also blog also about the space and just kind of the experience of what it's like to build this DAO, and all the thoughts we have about kind of the future of work and how this relates to Web3. And then overall, though, we're like the biggest tokenomics focused community on the internet. There's about 2,500 people in a Discord, almost 7,000 users. Not users, followers here on Twitter. And growing, and we're working away despite the bear market, building tools to help people create their own tokenomics, building kind of frameworks for investors to analyze tokenomics before they take the plunge and buy tokens. And most recently, we're trying to kind of come up with the next evolutionary step in what we're doing. And we have a strong desire to kind of create our own like web portal or like tokenomics research platform. But it's more than that. It's really a place for a new community to emerge and to have like really tokenomics focused discussions. And that's the Tokenomics Hub. So you can go to tokenomicshub.xyz and you can look at the prototype that's live there. There's about 20 protocols in there now. And it gives you kind of a really quick overview. So like the content that we create in these articles is really long form, and so it's like maybe like a 8-page article to read, which is great, but not everybody has the time, right? So in this platform, we're trying to condense it, and we're also adding a little bit more of our own opinion. It's not primarily focused at investors, but it's definitely an aspect of it. Of course, none of it is investment advice. But I guess the bigger vision behind Tokenomics Hub is that people can gather there, and it's kind of becomes more like a mix of Wikipedia and GitHub. So on one hand, people can join in and kind of submit their own research. And on the other hand, it's a way where we can have discussions about it specifically, but also in like a moderated form so that, things that people say are verifiable. So we're trying to keep the hype out. We're trying to really like, based on first principles, knowledge heavy discussion of certain projects. And so that's kind of what we do, what we're working on, and really anybody's welcome to join. We have different processes that are outlined for people to join. Based on this new Tokenomics Hub, it's actually become a lot easier now to get in. Essentially, the only thing you need to do to become a Tokenomics Hub contributor is approach us on Discord for now, and then we have a template that people can fill out and kind of submit the research for all the categories for each token. And then that's it. And then you are basically a Tokenomics Hub contributor, and you can, be involved on the inside. There's lots of opportunities for creating content and posting to our channels, and even get rewarded for doing so. We're building a system that people can also gain NFTs kind of as a badge for to build their reputation in tokenomics on chain, and so forth. So it's a big project that we're working on. We got about 20 contributors. About 10 of us are pretty active, and the future of tokenomics is ours to define. So I kind of think about it. All right. Any questions about that? Please raise your hand, and also happy to talk about that some more. I'm going to post a tweet with all the links that I just mentioned below this, so you guys can follow along. But of course, otherwise, it's also all in our bio here for Tokenomics DAO. Very cool. Well, I'm grateful for the plentiful attendance. Thank all of you guys for coming, and I hope you enjoyed it. And if you want to get in touch with us, the easiest way is to either do it here on Twitter or on Discord. If you want to ask a follow-up question to Chirag or myself, feel free to do so anytime. Cool. Chirag, any closing comments?
No, just that I've now been a contributor with Tokenomics DAO for a few months and completely subscribe to everything that Luis said. It's one of the most exciting communities of multiple DAOs that I'm part of. And I just wish that I could find more time to do more stuff. But absolutely amazing bunch of people, and anybody who wants to know about tokenomics, this is a place to be.
Yeah, we're happy to have you. So, a big part of the work is creating this long form content because it gives us a lot of credibility for our DAO. But then the other part of the work is doing what we're doing today. Going and talking about it and get distribution, get people to see it, and have interesting discussions about what other people are doing, right? Like MakerDAO. Very cool. Well, thank you guys, and we'll host these more often. So definitely, please follow Tokenomics DAO if you're not already, and join our Discord. You get updates and stuff there as well. Have a wonderful day.